Ladies and gentlemen, stocks are selling off today. It seems to be on fears that Powell is actually going to get fired. If that's the case, we have a big problem on our hands. Second part of today is it seems to be recession odds are rising following what Fed Goolsbee said overnight and what Trump said today. I will give you those headlines and everything you need to know here in this video. Tesla, as we expected, is down about 6.5% at the time of recording this video. That is because they are delaying, or the Reuters headline says they are delaying the Model 2. We'll know for sure coming tomorrow. And I'm still optimistic on Tesla earnings. But I will say you are at a pretty critical junction for Tesla stock following this sell-off. And we'll discuss that throughout this video. So first and foremost, Fed Goolsbee said overnight, preemptive buying before tariffs is probably more obvious on the business side, okay? So that's kind of suggesting that maybe the economy is not as strong as we think, just businesses are over ordering before the tariffs came in. So maybe the data looks good right now, but 3 months from now, you're going to see data that's not so good. Fed Goolsbee says that this raises the chance activity may appear artificially high now and will decrease later, like I said. And he does say that hard data into April was positive. So some of these comments from Fed Goolsbee just don't sound great for the future. As you know, as investors, we only care about what's coming next. We don't care about April's data. We care about 3 months from now, 6 months, 9 months, 12 months, 24 months from now. Fed Goolsbee says economists agree monetary autonomy from political interference is critically important. And yeah, that's why they cut rates before the election, right? And now refuse to. Come on now. They're not being this, political neutral body. They haven't been. Goolsbee says that he hopes we don't enter an environment where monetary independence is questioned. Also in the news today, China says that state-backed funds will cut off new investment in the US. So I think that's not progress on tariff negotiations, and that could be part of why stocks are under pressure today. Because as I've said before on this channel many times, when China comes to the negotiations table, that is when this crisis, this trade war, is most likely over with. When Wall Street assumes there's going to be a deal done with China. And you're not getting a lot of positive news on that today, and you didn't hear much over this weekend. China's foreign ministry says on U.S. sanctions on officials that China strongly condemns and decides to sanction relevant U.S. Congress members, officials, and heads of non-governmental organizations. So another kind of tit for tat here. And overnight, Putin signed a law ratifying a strategic partnership treaty with Iran. Fed Goolsbee says we've got short-run inflation expectations up, but long-run expectations not rising is very important. Goolsbee said the Fed needs to look to where things will be through the year. Tariffs are one input. He says that productivity growth has been strong. I want to understand if tariffs affect that. And he says the impacts of tariffs on the macro economy could be modest. The bank expects the Fed to deliver the next interest rate cut in June versus the prior forecast of May. They maintain a forecast of 125 basis points of cuts in 2025. That is 5 rate cuts. That is expecting the economy to get worse. Fed Goolsbee says we need to wait to figure out what to do. And he says it will be difficult if both sides of Fed's mandate go wrong. It's also about the magnitude of how long it lasts. And he says, I don't know what impact on supply chains will be. We want to be a steady hand. He says the inflation rate is higher in nations with political interference, and that he still believes rates will be lower in 12 to 18 months. Now, on Truth Social, Trump said this morning that Powell was a major loser, and that warned that the U.S. economy could slow down unless interest rate cuts happen immediately. He says, quote, preemptive cuts in interest rates are being called for by many, Trump wrote on Truth Social. Trump claimed that there is currently virtually no inflation in the U.S. and that costs for energy and most other things are on the decline. quote, with these costs trending so nicely downward, just what I predicted they would do, there can be almost no inflation. There can be a slowing, in bold, slowing of the economy unless Mr. Too Late, a major loser, lowers interest rates now. Now is also bold. So there's speculation that, Powell could be fired soon and ways to potentially do that. And that would be uncertainty and instability that the markets would probably not like. Now, maybe the markets would like interest rate cuts because maybe that would lower the odds of a recession that are skyrocketing again today. But it's hard to know that with any degree of certainty until something like that were to happen. Trump also said that Powell is always too late, except during the election period, calling Powell out for cutting rates right before the election and helping, as Trump said, sleepy Joe Biden. And that's true. I mean, let's face it. The Fed was swayed by politics, but cutting rates right before the election. That is something you normally do not do they cut rates by 0.5%, 50 basis points, September 18th. Like, that is seen as a political move, even by me. Now, also in kind of bad news today, India imposes a 12% temporary tariff or safeguard duty on some steel imports. So, kind of things moving in the wrong direction with India as well today. That's what the markets see this as. This 12% steel import tariff will last for 200 days from April 21st. The U.S. leading index change came in month over month at negative 0.7%. The forecast was negative 0.5%. The previous month was negative 0.3%. So it came in a little bit worse than expected. And here you can see today, just big tech is coming under a lot of pressure. Apple's down about 2.5%. Microsoft's down 2%. Google's down 2.5%. Meta's down 3%. Amazon's down 3.5%. Nvidia's down almost 5.5%. Under $100. Nvidia is at $96 per share. Now there's some good and there's some bad with big tech selling off. Good news is the bar is a lot lower than it was before. Okay. These stocks have essentially derated. So maybe earnings could actually be a positive catalyst for some of these companies, as long as, hey, it's not too bad, which I think is probably going to be the case. But I mean, you are setting a new kind of tone for markets for big tech. And, well, doesn't seem like we're too focused on earnings season right now. It seems like we're focused on the economy. We're focused on the Fed potentially, Powell getting fired. We're focused on a trade war. And that's pretty much about it right now. The Dow is down 1.81% right now. S&P is down over 2%. NASDAQ's down 2.5%. Surprisingly, Russell 2000 is only down about 1.5%, the best performing index on the day so far. The VIX is up 12.38%. And it's at 33.38. So you've kind of reset some of your, fear gauges, if you will. And, that could give you room to come down. I mean, you're at 515 on the SPY. Your 500-day moving average is at 504. That could be a level that needs to be tested again. But still, I mean, I think it's difficult to breach new lows. If we do breach new lows, then that would be a market that's down 22% from all-time highs. It's possible, especially if Powell does get fired, but I think you need to see some kind of major escalatory action to get new lows here. From current levels to theoretically hit new lows, that's another 7% lower or so. Again, it's possible, and you need to be prepared for that if that happens. But I think the bar is kind of high to get there again. And again, Tesla stock at the time of recording this video is down about 6.5% today. And we do have quite a bit of news actually to go over. Here you can see on X, Zengler calls it the Great the Tesla Great Wall of Semi. You can see the factory is looking very close to completed here, if not almost completed. And, production hopefully should be starting pretty soon. Aaron Cash on X shares a concept image of a Cybertruck rear-wheel drive with a full front bench seat, a manual roll-down windows, manual bed release, metal roof, 2 normal wipers, rear pass-through window, open bed, no cover, no bed power ports with a cloth interior, suggesting Tesla could do this for like $40,000. Kind of looks like a Cybertruck Rivian, version. The Cybertruck comments on this and says, "Me from Temu," which is kind of cool. I actually don't hate this at all. I would hope the top would be a little bit more flat instead of curved. But, to get a lower price point, I could see this. Now, here are the top rated questions for Tesla to answer on the earnings call coming tomorrow afternoon. The last conference call, Tesla answered 8 questions. They usually don't answer that many questions, but let me give you the rundown of them. So number 1, when will FSD unsupervised be available for personal use on personally owned cars? Number 2, is Tesla still on track for releasing more affordable models this year, or will you be focusing on simplified versions to enhance affordability similar to the rear-wheel drive Cybertruck? Number 3, how is Tesla positioning itself to flexibility to adapt to global economic risks in the form of tariffs, political bias, etc.? Number 4, does Tesla still have a battery supply constraint noted on the Q4 earnings call, and how does this change with tariffs? Did Tesla experience any meaningful changes in order flow rates in Q1 relating to all of the rumors of brand damage? I think that is actually a very big question. Number 6, is Robotaxi still on track for this year, which should be an obvious one. Number 7, regarding the Tesla Optimus pilot line, could you confirm if it is currently operational? If so, what is the current production rate of Optimus bots per week? Additionally, how might the recent tariffs impact the scalability of this production line moving forward? And number 8, what is the plan to achieve the White House stated goal of doubling deliveries in 2 years based on specific market segments and regional factory contributions? So some pretty good questions, I would say, overall. On the institutional side, the top 3 questions here are, number 1, what are the highest risk items on the critical path to Robotaxi launch and scaling? Number 2, can you please provide an update on the unbox method and how that is progressing? And number 3, does Tesla see Robotaxi as a winner-take-most market? And as you approach the Austin launch, how do you expect to compare against Waymo's offering, especially regarding pricing, geofencing, and regulatory flexibility? Also in the news today, Tesla gave a record 800 test drives in one day this weekend at the Almia car show in Sweden. And I think this is really big news as well today. Tesla reportedly wants India to chip in with integral part supply. Quote, Tesla is in discussions with U.S. chipmaker Micron as well as Mumbai-based CG Semi to evaluate procurement options as it looks to diversify its global supply chain. This is according to the India Times. And a one-of-a-kind community in Houston, Texas, made up entirely of Tesla-powered homes, has prompted a rush of interest from buyers in the U.S. All 11 homes in the community feature Tesla's solar tile roof shingles, EV chargers, and Powerwall home battery storage to ensure they get uninterrupted power. A realtor said, quote, I had over 150 plus people at my broker's open. It was insane. People were very excited. Houston is an oil and gas place, so having the first Tesla-powered homes is unheard of, she says. Washington state Democrats want to introduce a 10% tax on the money that Tesla receives in the state from selling carbon emissions credits. The bill explains that while reducing emissions is good, the creation of these tradable and bankable credits creates the opportunity for a financial windfall accruing to firms that are not burdened by the legacy production of internal combustion engine vehicles. That would be Tesla. The Wall Street Journal editorial board says, quote, Democrats are seeking every avenue to hurt Mr. Musk, short of setting Teslas on fire, and some progressives are doing that. But Democrats don't mind incinerating their environmental principles in the process, which is probably a good synopsis of this. Over on Ortex today, option activity from hedge funds and institutions is about neutral. You have a positive order value of 53%, 91 different trades totaling $80.05 million. And short sellers today, you can see, are covering about 1 million shares. There is 0 shares so far today that are being borrowed and sold short. But again, the stock's down 7%. So I imagine these numbers are going to update, and later on tonight, the numbers are going to look different. But so far, there's actually shorts covering on short positions. Right before Tesla earnings, I would say that is a good sign. And something that you can look at to say, hey, maybe the risk reward is kind of skewed to a positive reaction. Again, following the 7% decline we're seeing today, that would make sense. You're kind of pricing in the bad news before you get it. And people still, I believe, are overlooking what good we could get out of Tesla earnings. Google Trends data for Tesla starting to pick up at least a little bit for the Model Y, going from 13 to 14, Cybertruck going from 12 to 13, Model 3 at 11, Model S at 6, and the Model X at 4. This is for United States specifically, so looks okay, not great, not terrible. For worldwide, pretty much the same thing. Most of your models are moving up a couple points, and well, it looks okay. Not great, not terrible. What I'm really going to be looking out for, especially after earnings, is what does Tesla do with pricing? If Tesla can say all the positive things they want about demand and about pricing, or maybe it's negative, but really when it comes down to it, if Tesla has bad demand, they're going to cut prices. We've seen that with 2022, right? That was your roadmap for Tesla. They will incentivize, they will cut prices. Until they do that, I'm under the assumption that demand is pretty good. But we'll see what happens in the coming days and weeks. And honestly, if you're a bull in Tesla, that's the last thing you want to see, is Tesla starting to incentivize, reduce prices, go into a 2022 scenario all over again, as the stock is still, just utterly destroyed. It's down 50-ish% from all-time highs. A little bit over that, I believe. 54% from all-time highs. This is not a small decline. And again, that's one of the reasons I'm bullish. You're already down 54%, even since the last earnings that was, back here in January or so, from the rally after that earnings. You're down 47% from that point. These are huge numbers in just a quarter. Tesla's global inventory numbers have shot up at least a little bit for the Cybertruck and for the Model 3 at about 5,500 vehicles for both in global inventories. Model X shot up as well to about 4,900. Model S at 2,500. Look at the Model Y, still at only 1,200. That suggests to me there's a lot of demand for the Model Y. Tesla is now only running 1,000 ads with Google. This was at times over the last couple of months as high as 6,000. It dropped to 5,000. It sat at 4,000 for a while. Then it just recently dropped to 2,000 and was there for about 2 weeks. Now it's down to 1,000. So Tesla's stopping their advertising, which, could be a good sign for demand if they don't need to advertise. Or it just says maybe it's not worth it for Tesla. We'll see. The CNN Fear and Greed Index today is coming in at 19. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand in extreme fear. And junk bond demand, currently that's neutral. Last week's AI investor sentiment survey didn't move around as much as I thought it would. Bullish investors fell to 25.4%, neutral investors at 17.7%, and bearish investors really didn't move much, only dropped about 2% exactly, from 58.9% to 56.9%. So you still have 2 times as many bears than bulls. Right now, though, that's seems pretty accurate, given markets are on a downward trajectory. Again, when you're talking about firing Powell, when you're talking about, recession odds that are at 61% on Kalshi and rising, I'm not surprised that people are still really bearish. Because again, the question is not, are these tariffs going to go into effect? Wall Street is expecting that deals are going to be done. And over this 90-day pause, you're going to have a lot of progress on tariffs. That's fine. But, people are trying to figure out, long story short, is the damage already done in the economy? Are we already headed towards recession? Hell, are we already in a recession? The Atlanta Fed GDP Now tracker, if you exclude gold imports, is negative 0.1%. If you don't exclude those gold imports, which is not going to be done on the headline GDP number, GDP for Q1 is negative 2.2%. What are the odds that you get a negative Q2? And boom, you're in a technical defined recession. That's a very real possibility at this point. So let me know what you guys think about this down below in the comment section. In the next video, we will specifically talk about Tesla earnings. I expected the stock would fall like this today. I'm not surprised given the news that we covered over this weekend. But, as I explained in the last video, after the sell-off that we were going to see today, that's where I'm actually bullish on Tesla. Getting down to some of these lower levels right before a big catalyst, it's a very critical juncture where there's a lot of make or break it at stake here, right? You could easily see a 10-20% rally tomorrow, or you could see a 5-10% decline, in my view. I think if we get bad news, it's already priced in, but who knows? Tesla can surprise us sometimes. So we'll talk about that more in the next video. Ladies and gentlemen, that concludes this video. Hit that like button as well as subscribe to the channel if you have not done so already. Have a fantastic rest of your day, and I will see you in the next one.